Last month's NFP shook the market with disappointing job numbers, causing fears of U.S. recession to grow. Coupled with the increasingly dovish stance from the Fed, the odds of a Fed rate cut in September have soared to 100%. Around 60% of the market expects a 25 basis point cut, while some are even betting on a 50 basis point move. Will the Fed lower rates, and by how much? The upcoming August NFP could give us more hints. In this video, we'll dig into the August non-farm payrolls numbers that will be released on September 6 at 3:30 p.m. GMT3. Stay until the end to uncover the trading opportunities surrounding the data release. Before we dive in, make sure you hit the subscribe and notification buttons to stay updated with the latest trading insights. Last month, non-farm payrolls grew by just 114,000, which is much below the 185,000 estimate, while the unemployment rate rose to 4.3%, which is again the highest since October 2021. But that's not all. Wage growth also fell short of expectations, with hourly earnings up just 0.2% month-over-month and 3.6% year-over-year. The weak jobs data pushed the US dollar index to a 4-month low and sparked a rally in gold as hopes for a Fed rate cut surged. Meanwhile, the three major US stock indexes took a hit from the market sell-off and fell significantly, while crude oil prices continued to decline. For the upcoming August NFP, the market expects an addition of 164,000 new jobs, while the unemployment rate is expected to dip to 4.2%. On the other hand, average hourly wages are predicted to rise by 0.3% month-over-month and remain steady at 3.6% year-over-year. If the NFP numbers fall short of expectations, the Federal Reserve will be expected to cut its interest rate by more than 25 basis points. This could boost the U.S. stock market, gold prices, and non-U.S. currencies. The following are the recommendations and analysis on the relatively volatile trading products. First, let's look at the U.S. dollar index. The market foresees a potential upward trend on the greenback if the August NFP is better than expected. The dollar index may go upward and test the upper resistance level at 102.19 or 102.51. However, if the jobs data disappoints, the dollar may reverse its upward trend and drop to a lower level. The U.S. stock market has been boosted recently by strong tech earnings, while the Dow Jones Index has risen to a monthly high. If the NFP figures are more robust than expected, the index would plummet and test lower support. Conversely, the Dow will continue to rise upward and challenge the 42,000 resistance level if the NFP data weakens. On the other hand, gold price has been in range-bound ahead of the U.S. job data. A strong NFP could push the gold price further down and break the $2,478 or $2,471 support. But if the data fails to meet the expectations, we might see gold testing upper resistance at $2,532 or $2,539. The EUR/USD is also waiting for the non-farm payrolls result for the next moves. The euro could come under pressure against the US dollar if the US job market is stronger than expected. EUR/USD could potentially test the lower levels around 1.0986 and 1.0948. However, if the NFP figures fall short of expectations, the currency pair may rebound to the 1.11 barrier and test the 1.1173 and 1.11202 resistance. That's all for the NFP preview. Remember, the above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.